Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. It's now a new and second version. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show and best of the season, Hilliard.
The best season to you, too.
Hilliard, one of the credit unions in BC says the Vancouver housing market is now in a mild recession where it's becoming more of a buyers and sellers market. Is it a mild recession?
Yeah, they always look like they're mild when they start. So every hard landing starts as a soft landing, of course, and then it morphs into a hard landing. So there isn't much chance that the current correction in all parts of Canada, not just Vancouver, will eventually evolve into a hard landing. And the reason for that, well, there's a bunch of reasons, but the most important reason is the behavior of the lenders. So the lenders put out mortgages, and they have to assess the collateral, which is the value of the house, and they have to assess the income of the borrowers and their down payment and all that stuff. And so on the one side, the income of the borrowers was kind of being ignored there for a while. As long as you had 20% down payment, they kind of didn't really care if you actually even had any income. But the regulator changed that, and now they have to do a pretty severe check on the incomes, even if you have a 20% down payment. So that changed things quite a bit. That was about a year ago. And then on the collateral side, the value of the house, as the house prices are coming down, there's always, I remember back in the 1980s, you'd have the appraiser. You'd have several appraiser companies. You'd say, okay, we want a high appraisal on this one, we go to this company. You want an honest appraisal, we go to that company. And if we want a really low appraisal for some reason, we go to the third company. And so it's sometimes up to the lender if they want to be cautious or they want to be aggressive as to whether they can make that loan or not. And what is happening for sure now is the lenders are getting more and more cautious. And I don't have, you can't possibly, it'd be nice to be a bug on the wall of the boardroom meetings in the 55th floor in the high-rise tower in Toronto when they make these decisions. But you don't really have to have that information because you can see it in the numbers. So when you look at the mortgage, the new mortgage growth coming out, and it comes out every month, it's down below 5% annually. It's down about 3.5%. The most recent number just came out. So that tells you that the new mortgages being written are slowing dramatically. So, and it could be the lenders tightening up, being more demanding on those appraisals or the income verification check. Could be that people just aren't that excited about going into huge amounts of debt to buy housing anymore, or a combination of all of the above. But it happens every cycle, and what happens is, unfortunately, people get too enthusiastic and the lenders get too sloppy at the top of the cycle, and then people get too scared and too cautious later on at the bottom of the cycle, and lenders get really scared to make the loan. And part of the reason is, when people say the bank, well, there is no such thing as the bank. There are people that work for the bank. And people that work for the bank, the main thing that they care about is keeping their job and their bonuses. But the bonuses are more on when things are good. It's really important to make your bonus. When things start to turn nasty, as they have now, the most important thing is not the bonus anymore. The most important thing is keeping your job. Because once the bank lets you go in the middle of a downturn, it's going to be hard to find an equivalent job. So what's the most important thing in keeping your job if you work at a lender is not making a loan that defaults. So the individual loan officers who are making the decisions, they start to get very, very careful with those loan applications, and they start saying, well, what about this? What about that? Well, and so the next thing you know, the credit cycle is in full force, and everything's tighter. The appraisals come in lower, the lender's more cautious, the income verification checks are tighter, and the employees are being much more careful than they were just some cases. It's just 6 months ago. They were let's just get as many mortgages through the door as we can, and now the mood has changed. So it's happened over and over again, and unfortunately, what ends up happening then is you get less demand for housing only at a much lower price, and so initially in the first part of the correction, as the credit union says, it's generally just kind of a mild thing, but then it changes into the next phase at some point.
And of course, when buyers sniff that out, they're not going to buy at today's prices. They're going to see if prices are going to come down. And we said years ago, the cure for high prices is high prices. People just reach a point where it's unaffordable or it's not attractive, and they'll wait it out. And that usually brings prices down.
Yeah, once you take away, if somebody's stretching, if the family is stretching way beyond what they can really afford, even though the approval came through, as long as they believe prices are rising, they say to themselves, "Oh, we don't care. We probably can't afford this $1 million house and these, $4,000 a month mortgage payments, because 2 or 3 years now it'll be worth $1.5 million. So it doesn't matter." But if people start thinking, that $1 million house might only be worth $900,000, or even it actually doesn't even have to go down. It just has to level off. And then they start looking at those monthly mortgage payments and say, "Oh my goodness, that's the next 25 years. That's too much." And of course they have a lot of information the lender doesn't have. They know things like, well, how secure is the job? The lender just sees the income on the form, and the name of the company or the organization and the title of the job. But the individual employee might know a whole lot more. Like his job is about to be reclassified, or his whole division might be about to be canceled, and he might be laid off, or all that kind of stuff. So in the good times, nobody cares about that kind of stuff. In the bad times, people start to really care a lot. But the main thing is that when that mortgage growth slows below about 5%, what happens is there's just less money in the market to support the price of houses, and then house prices have to come down. And actually, it's even worse than that. Anytime the mortgage growth has slowed that much in the past, and it probably won't be different this time, although some people will say it's different this time. Anytime mortgage growth has slowed below, say, 4 or 5%, there's been a recession. So when you get in a recession, then of course you get into a whole new set of problems, which is employees are laid off, so they can't make their mortgage payments. House prices drop, and then all of a sudden, the collateral for those loans looks suspect, and the lender starts telling the appraisers to bring in low appraisals because they don't want to lend more than a certain amount on any given property. It just snowballs. It's like a cascading domino effect.
Also, I would think at 3.5% growth in the mortgage market, or it's at that rate, that's kind of your replacement housing, or housing of necessity, I call it. You moved, somebody got transferred, so the whole family packs up and moves and needs a place to live. So whether the prices are going up or down, you need a place to live. Those kind of sales, but not because you're looking at upgrading, your lifestyle. Yeah,
no, it's exactly right. That the move up. I mean, it's just amazing to me to think about this. But you think about the move up market, a $1 million house, and you decide that you want to sell that house and buy $1.5 million house. Well, it doesn't seem like much, but $500,000 additional debt to go from $1 million, even if you have a lot of equity in that $1 million house. When things were booming there, you didn't think about it at all. But nowadays, people might say, "Oh, I don't think so." So there are a certain number of people coming into the market all the time, and they kind of, they feel like they have to, especially in markets like Vancouver and Toronto, where the rental offerings are pretty limited. But they can always choose to buy lower in the scale, and then the move up people often they just completely stop because they find that when they go to sell their property that they want to leave behind, they can't get the price that they, and sometimes that's an anchor price that is a benchmark price that was hit a couple of years ago, like Vancouver peaked out in 2016, Toronto peaked out in 2017. But people have those numbers in there. On this street, that bungalow sold for $1.2 million, and I'm not selling. My house is way better than that. Got a bigger backyard. It's not on a corner or whatever. And there's no way I'm letting it go for less than $1.2 million. So they just decide to stay there rather than make a change. And I remember once in the 1980s, there was a new development in Edmonton, and it was actually a friend of mine that was doing it. And they eventually, to get people to move into this development, they eventually ended up buying their existing house because people couldn't sell their existing house in the middle of 1980s when the whole oil and gas downturn and everything was happening. And so in order to get this new development sold, they actually ended up having to buy the house from them. And I'm sure they took a loss on the house that they bought, but at least then they got them to move into the new development. So eventually the thing went bankrupt, but that was one way they tried to save it, was to help the people. And like people, I don't know, once that greed thing, once that John Maynard Keynes called it animal spirits, once people move out of that animal spirits phase and they start looking at things with sort of the cold, hard, and analytical way, they just decide, hey, you know what, I don't need to move, I could stay here. No big deal. I'll just stay where I am. And next thing you know, they're just paying back their mortgages rather than taking on new mortgages. And the whole system kind of falls apart at that point, unfortunately.
We'll have more with Hilliard MacBeth right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, the price of oil keeps coming down. It's now well below $50 at $46.97. Western Canadian Select $31, and gosh, it was down into the teens just not that long ago. So Canadian producers are finally making some money. And Alberta still hasn't officially instituted their production cuts. Do you think the provincial government might not institute them if the prices have come up this much?
That's a good question. I don't know. My guess is they'll go ahead because my understanding is there's 25 companies that are affected, and they have people talking to all 25 of those companies. So once you get a little ways into that process, it'd be pretty hard to go back. I mean, there must be some interesting conversations to say, well, you're going to cut 4,000 barrels. Well, yeah, but I heard that Joe over there is only cutting 3,000 barrels. Why do I have to cut more? Anyways, you can imagine what's going on. So I'm sure hopefully they have a very objective, clear-cut formula where there's no subjective assessments being done. And once you get a little ways down that path, you probably would go through with it. But they don't, as you point out, they don't come in until January the 1st, so we don't really know. The price of Western Canada Select went up already just based on the announcement, not on the actual cutbacks. So, but on the other side of the coin, the WTI has come down, as you point out, $46. And I just saw a report a few moments ago that the Midland, Texas price, which is different from the WTI price, a different geographic location. And Midland is right in the heart of the Permian Basin, which is where most of this new oil is coming from. That price is down below $40. It's at $39.67. So this is not a good development for Alberta because, or really anybody else, because that is that particular blend of crude, or that type of crude, is very light. It's very sweet. It doesn't have a lot of toxic elements in it. It doesn't have a lot of sulfur in it, and it's really easy to refine compared to the complex refinery that is needed for the Western Canada Select. So if that price comes down, there's no way that any of the other crudes can be priced higher than that. So now the only bottleneck is there, and it's a pretty big one, is they've grown that production so fast in the last 5 years that there's a shortage of pipeline capacity. But there are several pipelines under construction, and it's a fairly short. It's still several hundred miles, but it's not. There's no mountains or anything to go over. There's no approvals, big approvals needed like there is in Canada. So they expect that they'll have several new pipelines built by the middle of 2019. So 6 months from now, they'll be ready to ship that stuff. In the meantime, it might just go into storage tanks in the western part of Texas there until they can get those pipelines built.
Now, when do we expect any action on the Canadian pipeline that was frozen by the courts?
I'm not sure which pipeline you're talking
about. The major one from Edmonton to Burnaby, that the Canadian taxpayers own.
I noticed, and I just read, I don't know any more than just reading what I read in the announcement when it came out. I recall that the court said that they want the assessment done very quickly, like by January or February or something like that. So I suspect we'll hear fairly soon and early in 2019. But then how long does construction take, and how long, and there's always a possibility of new objections. And the latest one I just heard yesterday, which I haven't confirmed at all, is something to do with the tankers. So whether that's true or not, I don't know. But they're talking about going from one tanker a week to maybe 6 or 7 tankers a week, which is still
they would add one tanker a day. Instead of one a week,
one tanker a day versus 1 or 2 a week now. So if they move them at night, nobody will even notice, right? And they're not big tankers. This is one of the issues, that even if they get that pipeline built, and even if the tankers can float out of the Burnaby site and underneath the Lionsgate Bridge and out into the ocean without any problems, those tankers max out at about 80,000 deadweight tons, and
they're not super tankers.
They're not super, and the super tankers now, there's one port in Louisiana, which is a little far from Texas, that can handle the very large crude carriers. They're not, there's a bunch of them being built now. There's a whole bunch of them in service already, and they hold 320,000 deadweight tons, which is 2 million barrels. So 2 million barrels in one ship. And up until they build these deep water ports, what happens is you have to have a little ship shuttling back and forth and then offloading it into the big ship. And when they can pull them right into the terminal, it speeds things up quite a bit. So so in other words, in one movement from Louisiana, they can ship as much oil as probably going to take Burnaby probably a whole week of shuttling back and forth with the smaller tankers. So it's a tough game. I mean, it's really, and then at the other end, you get to China or Japan or Korea, wherever the oil is going. Did they have the right kind of refineries there? Like right now, when we send this Western Canada Select from Northern Alberta to the U.S., those refineries there are expecting that type of crude, and they're designed to handle that type of crude. But it's not clear that the refineries in China and Japan will be adequately set up to handle that. They might prefer the type of crude that's coming out of...
I actually heard that the Chinese prefer the Western Canadian Select because you can make so many different products from it, more than just gasoline and diesel.
Yeah, that's possible. I don't know that's now we're getting into beyond what I do know that when they ship the Western Canada Select, they dilute it with this diluent, which costs $60 to buy, or used to cost $60 to buy. I guess now it's come down a little bit. And then there's a second pipeline, if it's done in a pipeline, which takes the diluent back so they can reuse it. And they're able to recapture about 80% of the diluent. And that's the reason for the diluent is so that they can move through the pipeline more easily. And
a show I watched on pipelines, it's interesting. A pipeline doesn't carry just one product. They can ship natural gas, that lubricant they need to ship the heavy oil, gasoline, diesel, all in the same pipeline. They just put a little nitrogen bubble between each shipment. And there's a slight little waste product. So a pipeline is a pipeline, and you may call it an oil pipeline or a natural gas pipeline, but it can carry a number of different products, and of course you can turn it around as well. So yeah, if you need to ship that lubricant back, well, you can. And when you have two pipelines, it's perfect. One comes in, one goes out.
That's very interesting. I know that the pipeline, to me, is a better way of handling it than rail cars. Rail cars, it seems so messy, and now the Alberta government has announced they're going to buy a bunch of rail cars and put them into service, but they won't be available till, I think it's the middle of 2019. Again, everything's the middle of 2019. But that, that it has to be trucked to a terminal. It's in Hardisty, Alberta, or it could be by pipeline or by truck. Then it's got to be transshipped into the rail cars, and it's just and then of course the spill. If the train has an accident, as we saw in the Mégantic situation in Quebec, it can be a devastating thing because the rail lines tend to go right through the middle of the cities, and also they tend to go right alongside the rivers as well. So,
yes, they had a spill in the Squamish River of caustic soda. 3 rail cars went in, and it has basically sterilized that river for 20 years.
Yeah. So, now they're not talking about shipping rail cars, I don't think, to the West Coast. I think the rail cars all go south, but it's just not a good solution, and it's a temporary solution, and the railways aren't going to invest, in my opinion anyway, they're not going to invest billions of dollars to meet the demand for.
That's why Alberta has to buy an entire, and they said they're buying a train or 2 trains, so that means the engines as well.
Oh, they're buying several locomotives and a whole bunch of rail cars because nobody will do it because they know that as soon as the pipelines, it doesn't look now like these pipelines are ever going to be approved, but maybe someday they will be approved, and then the railway would be stuck with all this investment that nobody's going to want it, because it costs about $15 a barrel by rail, it costs about $5 a barrel by pipeline, and it costs way less than that by ocean, those great big ocean.
Oh, and what's the feeling here? We had the Premier of Quebec saying Quebec is not interested in pipelines, and Prime Minister Trudeau yesterday said Quebec's not interested in pipelines, so that deal is dead. Well, they won't be able to stop rail shipments, will they?
Yeah, I don't think anybody's going to send it all the way down there for... the problem with the East Coast is, although it seems attractive, it's a long ways away, so the cost of building anything is very big, and the main thing is they're on tidewater, so they can buy oil from the Permian Basin in the U.S. or from Saudi Arabia or anywhere, wherever the cheapest is. Angola, offshore Africa, there's all kinds of oil floating around, and sometimes those people that are selling that oil are desperate to sell it at a really cheap price. So this, there's no guarantee. You build a pipeline all the way across, somehow overcome Quebec's concerns or refusals, and then you get the pipeline built, and then no guarantee unless the government. We had nobody listening to this is going to know this, but in the 80s, the oil industry was regulated, and the most of the oil went to Ontario and east from Alberta, and it would go through the U.S. and then it would hook up with southern Ontario, and the whole system was regulated. So, and that's when the first cutbacks went through, and when Lougheed cut back on the oil production from Alberta, he was hurting the consumers in Ontario, and it only lasted about 6 months, and then the federal government caved, because the federal government was very involved in regulating how all this worked. But then in the late 80s, it was all deregulated, and now the oil just goes to wherever, right? So where the best bargain you can get is. So there's no requirement that Eastern Canada, even if Alberta built a pipeline down to Eastern Canada, there's no requirement they have to buy that oil. If they can get a better deal elsewhere, they probably would take it. So it's and then of course in the longer term, we're talking like 10 or 15 years. Who knows what happens with electric cars and that maybe they won't need as much oil. So I know you and I have talked about this before about Tesla. Well, we're now officially a 2 Tesla family. So we've got a Model S and a Model 3. So we've managed to completely get off of the gasoline system, and
nobody in Edmonton is throwing eggs at you yet.
Well, I'm a little, the good news is that there's quite a few of them around now. So the Model 3 it's not cheap. Like it's not the $35,000 that Elon Musk said it was going to be. It's like in Canada, it's like double that, right? But in Canadian dollars. But there are every day I see more and more of them floating around, and so maybe somebody will throw eggs at one of them, but hopefully it won't be ours. But yeah, there's more chargers all the time. There's more, but the one thing this is totally anecdotal, but the thing I judge it by is the amount of interest you get from people, and like literally wherever you go, wherever you stop, people will ask you, well, how does it work? How far does it go? And the two questions are always, how far does it go on a charge? And what happens in the winter? Like, because you do lose some power from the battery in the winter. Everybody's used to their car battery, the 12-volt battery, not starting the car when it gets too cold. So they of course, these batteries for the electric cars are much, much bigger. But so those are the two questions. So you answer those questions, and then they say, oh, yeah. And then I even had a guy in an F-250 pickup truck that was going to the Union Hall, because where I was right, I was going to a place in the same building as the union meeting. And he asked me about how does it work? So I figure if that happens in Alberta, then the interest is pretty widespread.
We'll have more with Hilliard MacBeth right after this.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Everybody's got a cell phone or two now, and people are worried about cybersecurity. Huawei, the people whose chief financial officer is now on house arrest in Vancouver, waiting an extradition hearing because the Americans want her in connection to what they said is violation of their sanctions against Iran. But in the meantime, Huawei is under attack by all the English-speaking nations. They call them the Five Eyes, who share intelligence information. All these countries are claiming that Huawei phones are directly wired to Beijing to feed them your personal data. Now today, Huawei saying, prove that they're doing that or can do that. Are most personal devices now in every computer wired to somebody and backdoored to someone to give them your information that you don't know about?
I guess I don't know. I don't know the answer to that question. If it was a really good backdoor, we wouldn't know that the backdoor was there. So, but conspiracy theories will grow. And one of the things that's happened in Canada is and I looked this up because we were looking for an investment in this 5G space, and the leaders are Nokia from Finland and Ericsson from Sweden. And then you've got Huawei and ZTE. Well, Huawei and ZTE, as you mentioned, are banned in the U.S. under this Five Eyes intelligence. Canada, by the way, is a member of the Five Eyes intelligence. So it's Australia, Canada, the U.S., United Kingdom, and one other. So the Canada has to choose, but unfortunately, the carriers like TELUS, I understand TELUS, Rogers, and Bell have all gone ahead and purchased a bunch of Huawei equipment. And you'll see on the National Hockey Night in Canada, you see the advertisement at the Huawei. They got their little
right on their desk
logo right on the desk when they're. I usually fast forward through that part, but apparently the logo's right there. So they were heavily involved with the Ottawa Senators, which is, I guess, maybe not the best of the Canadian hockey teams, but people in Ottawa love them, I think. So they've got over 900 employees in Canada. They've got 600 employees in the research and development department alone. They funded research projects at several major educational institutions in Canada. I mean, this is a big deal for Canada to say, no, we don't want Huawei equipment. So, but the reality is that Canada probably has to go with the U.S., and the U.S. seems determined to not have Huawei equipment. So far, as I understand it, most of the spending has been on 3G and 4G, and now we're going to go into this new thing called 5G, which means fifth generation, as probably people know. So, fifth generation is a game changer. You know, they always say, well, it's a big deal, but this is a big deal. So they're talking as much as 1,000 times faster. And what that means is for things like autonomous cars driving, virtual reality, augmented reality, the Internet of Things, where all the devices will be connected together. This is what was required. The 5G is what's going to make it possible. So when people start investing in 5G, it's going to be a long-term investment, and it's going to be a big deal. And then it isn't so much that they'd be stealing our personal information, but if there was a bad actor in there that had control of that equipment, they could literally bring the whole grid system to a halt, for example. You know, if you're talking about a bunch of autonomous cars driving around. So that's what the concern is. So, and this is, in my opinion anyway, this thing between China and the U.S. is going to get more contentious, is going to get nastier. And I don't think the Chinese are backing down. They've got a thing called Made in China 2025, where they're insisting that the technology will be Chinese technology. Up until now, they've mostly bought other people's technology or copied it, but they're determined, especially on artificial intelligence, to be a leader in their own right. And the Americans seem to be equally determined. And you know, the thing with the American politicians is when they beat up on China over a trade tariff or technology, stolen technology, the voters love it. Like, it's not like they're winning political points like crazy every time they attack China. There's almost no downside for them. And so they're not going to stop doing that. So the combination of those two things means it's going to be a long and drawn out, or long after. I think they're not talking about tariffs anymore. They're still going to be talking about this technology, the theft of technology, who controls the technology, and things like 5G. There'll be things like 5G in other areas of our lives, not just in the telecommunications area. So this is the first big one that's come up, and Canada's caught in the middle, right? So we have to decide, I guess, as Canadians, whose side are we going to choose? And
well, until we had the tariffs imposed on Canada, at least the U.S. was our friend. Now we've got nobody. The Saudis hate us, the Russians hate us, the Chinese hate us, and the Americans aren't being friendly.
You know, I was thinking, I don't know if this is right, but I had this thought that you know, the Canadians, like I include myself, obviously, we just thought if we were respectful and nice and polite and everything, everybody would kind of leave us alone and they wouldn't go after us. But now we've discovered that we actually have to get in there and mix it up a little bit. We have to drop the gloves, to use the hockey analogy. So the question is, what are we going to do? We're not used to this sort of thing. We're used to a different kind of lifestyle. So, But I'm pretty sure that we have to pick the U.S. The current administration in the U.S. is not going to be there forever. And in the past, we've actually had a really good relationship with U.S. governments. So, and I don't think the relationship probably is that bad with this U.S. government either. All that noise about NAFTA seems to have died down. They did redo NAFTA. It wasn't a big redo. It was sort of more cosmetic than anything. But we really don't have a lot of choice. We basically have to choose that side, I think.
Hilliard, best of the season.
The same to you, and we'll see you next year.
My guest has been Hilliard MacBeth, author of the new version of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethgroup.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. Questions for the show or our guests, like Hilliard, can be sent to info@HowStreet.com. I'm Jim Goddard. Happy holidays.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.